What's up, gang? It's your girl Romy. I wanted to check in really quickly and do a brief recap and discuss one of my favorite stocks, Apple. Let me do some quick housekeeping. This is not financial advice. I'm not a financial advisor. If you like the video, give it a quick thumbs up. If this is your first time here, welcome. Don't forget to hit subscribe so that you can be alerted to whenever I post. Also, I provided a link below so that you can avail yourself to some free stocks. So we had an exciting week last week on Wall Street. Tesla brought the volatility that we've come to expect from it. And even if you sat on the sidelines, it was something to behold. Now, I haven't covered Tesla and there isn't much to say. The stock is a wild horse and there are no real fundamentals. Or what are the real fundamentals for Tesla? It's easy, right? It goes up, it rests. It goes up, it rests. It goes up, it rests. You see a common pattern here? Yeah, it isn't for the faint of heart. I actually love the fact that it was entered into the S&P, and this way maybe it can be tamed, and most shorts have been covered, and therefore we won't have those price fluctuations, those wild spikes and declines that we're used to or that we've seen in the past. And just maybe we can see Tesla build an actual base and we can do some tight charting. The Fed is also buying bonds. So what does that mean? It means that there is more money available to be lent out, which increases the supply, which thereby decreases the demand, which allows us to keep interest rates at bay without getting into the weeds, short and sweet. Also, the Fed has also allowed the banks to buy back their shares, and the dividend seems to be safe, albeit it will be capped, so that's good news. There are a number of vaccines hitting the market. However, the U.S. has now reported over 17 million COVID cases. Now, I know we're all here to discuss stocks. However, we've all been impacted in some way, and maybe that's why you're here. Maybe you have some free time on your hands. Maybe you've been dislocated from your job. Maybe you're just looking to supplement your income, and this is why you're trading. But for sure, you've been impacted in some way by these unforeseen events. There's still no stimulus, but we won't let that hamper, disrupt, or derail this train, right? So now, without further ado, Apple. So I want to start off by saying I am an Apple bull. Again, I am an Apple bull. Apple can do no wrong. Apple pays a dividend. The worst mistake I ever made in my life once, a very long time ago, was selling out of my Apple shares. So there are a number of reasons for me to personally advocate for one to purchase Apple shares. However, I'm going to let the charts speak for themselves. I'm going to briefly talk about support and resistance areas and where you should be buying in, and you can then decide, again, your risk tolerance, how long you want to hold on to the stocks, what plays you might want to make. You don't necessarily have to sit on Apple for forever, but know that this is an investment. And let me stress that again, this is an investment, not necessarily a trade. Do not trade Apple. One invests in Apple. Now, I was very hesitant in discussing Apple because, again, we're talking about small accounts, hopefully graduating into medium and large size accounts, and hopefully your retirement funds. But Apple is such a behemoth, and I've been asked on many occasions to discuss this and other big name tickers, and I will. But I wanted to start with Apple because that's just my love and my preference. So I want you guys to take a look at this chart and look at it in depth. I also want you to download the Thinkorswim app. There's no plug for Thinkorswim, but maybe it is a plug for Thinkorswim because I think it's user friendly and it's just very helpful when you want to inform your decisions when you're purchasing stocks or evaluating a ticker. So every time a stock hits a certain point, and then drops back down to a certain level. That is called resistance. So say for instance, Apple, every time it gets to 128.26, it falls back down. It cannot break that 128.26 level. That would be considered resistance. However, when Apple falls down to 126.65, which is the current price is trading at, or 125.50 or 124.11, that is called support. There are different levels of support. It might be the first level of support, the second level of support, or strong support or weak support, things of that nature. So familiarize yourself with terms like resistance and support. So right now, Apple is currently trading at 126.65. It was down on Friday. And again, we have to think about why people were doing rebalancing. They were trying to make room for Tesla within their portfolio, so they had to sell out of certain shares so that they could incorporate Tesla into their portfolio. So Apple was trading down. It had a very phenomenal week as far as I'm concerned. If you look at that gray area over to the left, that's called a gap. It means that Apple once rose to that price level and it hasn't filled that level again because it keeps hitting that resistance, right? It keeps hitting that 128.26. I'm just going with a round number, but it might be 128.26. I believe that is the actual resistance that Apple needs to break for it to really take off. So that gray area is a gap to fill, which means it was trading at that level and it hasn't. So there are some people that might still be in the trade at that level, like they bought the stock at that price. So that's when they say there is a gap to fill, whether it's an up gap or down gap, whatever the case may be, it's still a gap to be filled. And historically, gaps are filled. So what I want you to do is look at the chart, look for patterns, familiarize yourself with patterns, make markings, draw all over the patterns. Investopedia is a really good resource, right? It's also free. So a good buy-in for Apple at the very low for me would be 124.11. Do I see it going to 121? Maybe. You know, we don't know what the end of the month has in store for us or what news might impact the stock, or if a failure to come to a stimulus agreement tanks the market yet again. But good levels of support for Apple would be 125.50. Another would be 124.11. And as you can see, I drew a channel. If Apple should fall out of that channel, then we might be looking at lower lows, and lower lows would be 110. So with anything, I want you to scale in. If Apple takes off next week, then I still want you to wait and buy Apple at its support levels at 125, 124 if the current trading price at the time is a little too rich for you. But again, look at the trend. It's just upward trajectory. The price target on Apple from analysts is at the time 150. So their price target is 150. My price target is a lot higher, and that's for 2021. My price target for Apple is 180. Now, if you want to be conservative, I would say stick with the analysts. You know, they are paid to do a job. They've been schooled to do this job, and they might be seeing things that I'm not seeing, right? And so go with that price target of 150. So right now, again, Apple is currently trading at 126, and they're saying that the price should rise by $24. So if this is something that's that looks good to you, that looks sexy to you, by all means invest in it. And again, Apple is an investment, not a trade. If you can remember anything, remember I said that. Like this video, give it a thumbs up. Don't forget to hit subscribe if this is your first time here. Until next time, if they ask you why it's so easy, say, Roby taught me.